All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's been open for just over 2 hours here today. It's up about 30 points, about 1%. You can kind of see the bounce here that the market has after Friday's action. You also notice the volume is pretty normal today. It's very normal in the market for a Monday morning and on some sort of rebound. In fact, there's a lot of this morning that just is really normal, in terms of what we tend to see in, conditions that are turning a little more bearish overall. And one of the things about a bearish style market, it's not always true that a bear market style drops and drops hard. Yeah, that does happen. But a bear market style has bigger pops and bigger drops. And, the pop we're getting today is the biggest pop that the market has had since back here in January, right? So it's one where, we're talking about a 1% move as a big pop, but, the magnitude of movement is going to be increased. And we're seeing that here today, with the snapback. And you just think about, hey, where's the market right now? The market's where it was on Wednesday at the close. That's where the market is. Wednesday's close is where it is. It's had, a 50-point round trip to get back here, but it's done it relatively quickly. Now, it's not the fastest paced or anything like that, but, normal for when we start to see, the bears take some of the metrics. And we talked about on Friday, market getting into a short-term oversold condition. It's always a tough one. When the market gets short-term oversold, this is what the market needs to, have a flush, right? You get flushes out of short-term oversold. Right back here, market short-term oversold, flush, right? Right here, market short-term oversold, bounce, right? It is one of those situations where it can really go either way in the short run, and we can go look at infinite examples of both of those things happening, and today we are seeing it on the pop side. Now, Friday into the close, and I know I'm only going to talk about the challenge trades on Fridays, but I'm going to make an exception here today because Friday into the close, I bought about $800 worth of Apple, and I bought some puts on Apple. And Apple decided to rally into the close. And, then it was upgraded this morning. And one of you commented to me today about my fortune when it comes to upgrades, downgrades. And yes, the odds of upgrades and downgrades going in my favor are way out of balance, way skewed. And I don't have an explanation for it. Just is what it is. And, if I see a really good explanation someday, maybe I'll take it to heart. But I haven't seen a good explanation yet. Okay, great. Gets upgraded. Gaps up, and it hasn't turned back at all here today. Fresh gap above the 7. This morning, the option values, they opened at about 50 cents. By the time, the spreads came in, they were about 50 cents. So it was about $200. And what I want to address here is a comment that came into me earlier today, basically assuming that I thought Apple was going to go down because I'm still holding my puts. And when it comes down to the market, you hear me repeat these factors: risk, reward, exposure, right? Risk, reward, exposure. Those are the things that I can control, right? So, right, and let's just go back to Friday. And Friday, I'm holding Microsoft puts, right? Microsoft puts, I'm holding them, and the market opens, and Microsoft opens right down here. Okay. What's my risk, what's my reward, and what's my exposure at that point, right? At that real-time level. It's not all, it's a lot, right? Sorry about that. I need to mute that. But it's pretty, it's pretty, what? I did how many contracts at $1.32? 10 contracts at $1.32 and sold it at $1.30 or $2.35. But, right here, my original position was $1,300. That was my original position. in terms of the challenge value and what it was relative to the challenge, that exposure level was fairly high, 70%. Well, when it dropped to here, my risk on it was 2,300, right? And the percentage of the challenge, and this number is a little high, sorry, 60%, somewhere around there. But 2,300 when the challenge is about 3,400. So my exposure level is really high. It's somewhere around 70%, right? Jumped up to around 70%. Am I willing to hold a 70% downside exposure right here with the snapback risk and the short-term oversold? No, I wasn't. I just absolutely wasn't willing to take that risk. Now, if Microsoft were down $2 today, yeah, well, I mean, you should have held it, right? Of course, should have held it, should have. That's all in hindsight. But in real time, that's my risk-reward exposure. Now, let's take Apple, right? Let's take Apple. On Friday, right? On Friday, I went in, I bought 4 contracts, so about $900. That's my risk. What's the exposure? Well, the exposure was 25%. Compare that to Microsoft. Compare that exposure to Microsoft. Very, very different. A third of the exposure. Drop the exposure in a big way. All right. I know my risk is 900. Unfortunately today, I'm realizing that risk. And what's my option worth at the moment? Let's go take a look here. Let's see. It is worth 21 cents, so it's worth $80 minus commission. So what's my risk right here? My risk is $80. What's my exposure level? Right? My exposure level challenges somewhere around 2,800 right now, right? My exposure level is $80 out of 2,800. The quick math isn't coming into my head, but it's 3% maybe? Maybe a little less than 3%? You compare that risk and exposure level here with Apple to what Microsoft was Friday morning, where Microsoft was 2,300, okay, 2,300 out of 3,600. That's a very different risk level there. What's the point? Well, here's Apple. Just because I'm holding the puts doesn't mean I think the stock's going to go down. If my exposure were similar to what it was on Microsoft, I would have been out, boom, right away this morning. I wouldn't care about the spread, nothing, gone. I'd get out right now. If basically Apple were anything but 3% of the challenge, I'd be gone. Me holding it doesn't say, hey, you know what, Jeff, you think that you think that Apple's going to go down. No, I don't think it's going to go down. I don't think it's going to go down in the time frame of my option by this Friday. I think it would take a heck of a lot. Have we seen that type of action happen? Yeah, we have. It has happened before. We've seen this type of action right up here. Right? And we've seen it recently, but is it what I expect? No. The odds of it are very slim. But $80 on slim odds is very different than $2,000 on high odds. So, me holding Apple here is just simply, okay, you know what? I don't have much to lose. The bulk of what I lost happened in the gap. I don't have control over the gap. I wish I did. But now holding it isn't me endorsing adding exposure. Isn't me endorsing that, I think Apple's going to go down big. It may, and if it does, great. That option will pay off. And if not, okay, great. Well, I'm not in a different position this afternoon from what I am right now. Holding Apple doesn't put me in a different position on Wednesday. In fact, the only thing that holding Apple can do, possibly, is put me in a better position in the future. That's really the only thing Apple can do from now. So what's the point of me popping on out of it when the only thing it can really do is help me in the future? Now, if it could really hurt me in the future, yeah, I'd have to pop out, right? I'd have to move on. But I've realized the loss. I jumped in Friday afternoon. I just wanted some exposure in case we got the flush, come into this market. And, I put in what I was willing to risk there. You'll notice I did not do a same percentage position as I did with, HAL or Microsoft or, other trades this challenge. But puts challenge, back there around 2,800. And, here we grind on. That's Apple. And I just wanted to kind of clarify that, just so that I know that when I hold something or when I buy something, a lot gets read into it, and I'm trying to dissipate that a little bit and tell you what to read into this. And the thing to read, and the only thing I read into this is, okay, it's $80. All that's going to do is help me. It can only help me. It really can't hurt me. So I'm not, I'm not too concerned about it. There with Apple. Holding Microsoft could have just killed the challenge, right? That risk factor could absolutely do it. Now, we have this, you'll notice Microsoft doing the same thing as Apple today. In fact, a lot of tech kind of doing the same thing here today. Big moves up and recapturing their 7-day moving averages across the board. In fact, the number of stocks moving back above 7-day moving averages today is very high. In fact, if we just go and look at the pure number above sevens, it's up to 207. So there's about 100 stocks out there that recaptured their 7-day moving average today. It's not en masse, but it's still only 40% above. But it's a much higher number than, what it was on Friday. And, if you start to look at some of these, like in Apple, it's breaking some of the recent highs. It's a very healthy move. It's a very healthy move for many of the tech-driven names. It's also one that is normal in terms of, either finding a consolidation or finding a brand new big bad bear market. And, we got the market short-term oversold, boom, snapping on back. A lot of times what we'll see after this is another day higher, where you get another day higher, and if it stalls on that day, you basically trade the next day gap, right? So let's just say market closes here for today, right? Which I would be surprised if the market does not close near its highs on the day today. I'd be very surprised. It may be a little off its highs, but it's going to close close to its highs most likely, given everything that's going on out there. And the chances are the market will gap up tomorrow. And I think there's a good chance that the market goes nowhere tomorrow. That it gaps up and sits. It just gaps up and sits. And it's going to have everybody going, oh, well. And then if it gaps up the next day, chances are we're going to new short-term highs. Gaps down, you can play that thing lower down here to 270. Right? And I think that's kind of what we're going to see here this week, what we're going to see play out here this week. Obviously, there's some news events and different things that could, challenge or shake that. But one thing is very clear. We have found the reaction low for a consolidation range. And a reaction low here that if gets broken, we will see significant downside. But we've had that first leg, and now getting that that pop into it. If you look at something like small caps today, you'll notice they're not lagging on the day. Right? They're leading by a few micro percentage points, but there's not a lag there with those. You look at transports, there's not a big lag in there. They're all kind of doing about the same thing here, across the board when it just comes down to it. And you look at the emerging market ETF, kind of the same thing. China ETF, kind of the same thing. We're seeing kind of that same element across the board out there. Now, ultimately, right, I'm still bearish, right? I'm still bearish overall. I still think there's a lot of downside to come in this market. But But I do have to recognize, okay, today, gap up. All right, that creates a little bit of a technical switch. Now I have to wait for, to kind of shake off this kind of little bit oversold position. Is it done? Has it shaken it off? Yeah, it has. Right, the market is shaking off its short-term oversold position. When we come into an hourly chart and we look at, some of the oversold that was the market with the MFI and the CCI, it is shaking that off. And whatever overbought, oversold indicator we want to put on, the market is shaking all of that off, and it's coming up into a interesting level. The lows from February, late February, early March that broke. Those are going to get retested. Those are going to be retested here, and we aren't in an overbought position yet. But starting to get a little bit close with some stocks and some things out there. And, I'll be looking at some of these rallies to sell into. I was looking at Home Depot this morning. On its gap up, and do I use this opportunity to go after some Home Depot puts here? You can see the daily chart right here. This is one that just screams it's got 170, 168 written all over it. So I'd like to go and get into a Home Depot, and so far today I can't. The price action is pretty good. For that I would like to see it break down below its 7-hour moving average before looking to go after it. I think stocks like Nike are very interesting, and I say that because me, I'm bullish Nike longer term. I'm very bullish Nike longer term, but it's had a monster rally, and rightfully so, and then had this gap up. Here at the end of March, and then that got sold into. It's not huge volume to suggest, the top is in, right? But it is the type of price action that can be a short-term top marker. Do we start to see this kind of move back into the 83 area? And that's kind of what I'm looking for. Nike is back somewhere in the 83 area, maybe even the 80 to 81 area here for the stock. So looking for an entry point there on that. The news of the day, really revolves around Boeing. And the crash, and you had China ground all that model of Boeing aircraft, and there's going to be reverberations and ramifications going forward. We see it happen from time to time with Boeing. If you're in Boeing calls, I feel you. I've been in Boeing calls before, where I turn on CNBC and there's a Boeing Dreamliner there on the tarmac of Heathrow Airport, and it's in flames, and Boeing stock just drops, right? Most times these are very short-term type of situations. They're not game changers. They're short-term reactions to it. I expect that that's what this will be, but you do have to respect, or I have to respect, the valuation on Boeing. And, if we come in to look at Boeing fundamentally, let me see if I can pull it up here, maybe, if it'll load. All right, let me sign in here. I'll just pull up some of the valuation charts here. But this is a company trading at something like 24 PE, somewhere around there. 24, 25. Let me double check. Here we go. Fundamental chart. All right. Apologize for that noise. There we go. Got rid of that. All right. So here's Boeing, and if we look at something like a price to book value, right? Boeing, we'll take a look at over the last 10 years. If you look at a price to book value, it's pretty expensive, but it doesn't really matter with Boeing. The way they do some of the accounting, skews a price to book value number. So I don't really read anything into it. Price to earnings, PE ratio, is going to be a little bit more valuable for Boeing. Whoops. Here we go. So PE ratio 22, 22 here. If you count today's drop, so it was around 24, 25. That's a big drop in a PE ratio in a short amount of time. It's not in a super expensive, not in a super cheap area as well. If you go price to sales, you can see this is up over 2.7, and it's one of the highest numbers that Boeing has ever had in terms of its price to sales. But Boeing has been going up. Why? Because of revenue growth. And, they continue with this revenue growth story. They've got the initial bumps from, the elections, U.S. President Trump, some of the spending, some of the favoritism towards Boeing. In terms of contracts, which is, an absolute reality out there. And, it's one that is priced in for perfection. So, if you have a stock with such high expectations and priced for perfection, a little bit of drop or a little bit of bad news is going to cause a bigger drop. And it's not like, fund managers can just sit in it and say, oh, well, let it play out. There's going to be some movement here with it, and it's one where I would not be surprised to see it come back and test some of the 340 to 360 area from a fundamental standpoint. I'd be very surprised for it to be up in the 460 to 480 from a fundamental standpoint, but chances are pretty good that we'll see Boeing churn around in this churn in this 360 to 400 area for a little bit of time here, given what the valuations are and given what the news is. And there's definite risk that Boeing could lose business and all of that kind of stuff and lawsuits and everything else. But one thing to kind of just keep in mind about Boeing is, their business is stacked out for a long period of time, and lawsuits are one-offs. Lawsuits are one-offs and one-time things. They're not residual type of things, and they could definitely handle it. But it's probably going to be used as a political card in trade negotiations and with China and all of that. So the drama will continue there. With Boeing. So, we see that kind of story there, and that is putting some pressure on the Dow. Today, that's why the Dow is underperforming. The Dow's doing a little bit better thanks to Apple. It just keeps on ticking up. But, overall, that's kind of a little drag, there that we see. The banks here today, things like Bank of America, very nice positive move, very strong move. JP Morgan, same thing, very nice positive, strong move. And on a lot of these stocks that are snapping back above their 7, it's from looking at it from a bearish perspective like I am, it's just kind of an easy, all right, great. This actually puts it easier to know when should I go and jump in, because I can wait for the next break of the 7, next break of the 7 hour. It's a lot tougher trying to figure out where to enter when it's, down here. And you go, well, I'm near support levels, but all my indicators are down. These pops start to make it a little bit easier to understand, okay, when is something going to be set up? And bottom line for me, I think there's still a little more upside here. I think there's still a little bit more upside here, to come to the market and to come with many of these stocks. And I would be very surprised if we don't see a little bit of a gap up, here tomorrow, with the market. Assuming the market closes near its highs today, chances are it will gap up tomorrow. And then that will now leave me in a position to go, okay, do I want to look at shorting some of these that have made nice 3-day moves? And do we start to see some of them falter off, and really be able to look at things? But, where things are, most things are kind of trading in the same spots. The charts are relatively the same. That same type of snapback, mentality or picture, that we see just across the board. One exception is Alcoa. Down 30% here today. Wow. But we are seeing some interesting action, overall, where, a thing like a Home Depot or an FCX, really lagging today. And, if we look at those and they're lagging again tomorrow on a gap up on the market, I think they're prime candidates, to go after going forward. Thanks for hopping on. Have yourselves a great one. And we'll talk to you later. Take care.